there's a lot of grey areas in terms of interpreting these different principles and the application of them. But can I put the importance of it this way? Every listed company in the world should be considering each of these principles and how they address them, particularly the ESG, environmental, social and governance. So for example, we look at the Norwegian sovereign fund. So the Norwegians have made all their money out of oil. Funny enough, they've just said they're going to exclude fossil fuel companies from their investment portfolio. So how about that? How ironic is that? So every company, if you've got a group like the Norwegians saying we're not going to invest in fossil fuel, every company needs to have a look at what they're operating in. So it's extremely important. In terms of the grey areas and the interpretation, what I mean by that is that each investor has their own view on what is acceptable. Applying these three principles or approaches, what is acceptable? So the most controversy occurs in the first two aspects of that, the exclusion aspect, the socially responsible investing aspect, what stocks should be included. So for example, you may have a stock that has 2% of its revenue from tobacco. Should that be excluded? The approach we take is exclude the obvious controversial industries such as human rights violations. No one in their right mind would invest in a company that's violating human rights. In terms of that grey area, avoid companies where what they're engaged in is debatable. Have thresholds in terms of how much revenue for those debatable industries you are willing to accept as an investor. And have a scoring system. So our scoring system is a traffic light system. So when we research an investment, we give it either a green light, a yellow light, an orange light, or a red light. So a way of moderating exactly what exposure it has to the controversial industries. We're seeing incredible demand, or at the very least questions about sustainable investing from our clients. I think there's a couple of factors driving this. Firstly, more awareness of the impact of climate change, environmental issues, particularly around what's happening in Asia and Latin America, and with the fires in the Amazon and the fires in Indonesia. You know, this is real. This is rainforest burning. This is the lungs of the earth burning. And climate change is real. The science is in. We know that. So more awareness of that. The other thing we notice with our clients is that their children and the younger people, our younger clients, are really speaking up and saying to their parents, what are we doing about this? So there would not be a not-for-profit that we deal with, for example, that does not address this issue. There would not be a family office who, by nature, has younger people looking at what they're investing in. There would not be a family office who do not ask us about this. So it's been driven by the client base. They want action, and it's not just our client base. It's the super industry, industry funds, sovereign funds, which I mentioned the Norwegian sovereign fund. So there's pressure from the investors for the companies to focus on what impact they're having in terms of ESG and socially responsible activities. So the focus on returns only seems to be changing to me. I mean, I've been in the industry for 25 years of investing, and in the early days, ethical investing, it was a nice thing to have, but no one took it too seriously. Now it's front of mind. It's a big topic. So what I would say is that it's been implemented more and more. I would say of our client base, it's a minority or less than 50% at the moment, but there wouldn't be a proposal to a new prospect that we're doing that doesn't include some sort of how are you addressing these issues. I think the data is also in that you're not giving away any sort of performance. We look at it really simply. So we look at there's certain exchange traded funds globally that have a sustainable investing overlay to them. So we just look at the performance of those. How's How's the S&P 500 done versus the S&P 500 with a sustainable overlay? It might surprise you to know the sustainable overlay in the last 10 years has actually done better. And actually we've found that in different developed markets as well. So we're very confident to say to our clients, you are not being penalised for having a sustainable investing overlay on your portfolio.